If you only own public stocks and bonds, you may be missing three categories that have generated meaningful returns for decades. Number one, private equity. Ownership in private companies that aren't available on the stock market. The case for private equity is that a skilled manager has tools and flexibility public market investors simply don't. They can buy small companies in the same industry and combine them into one larger business that commands a higher price. They can invest in fast-growing companies years before those companies go public, capturing returns that public market investors cannot. They can buy existing stakes in private equity funds from other investors at a discount, which lowers the entry price and shortens the hold period. The best managers have historically used that flexibility to compound capital at rates public markets have not been able to match over long periods. Number two, private credit. Lending to businesses outside of the traditional banking system. Private credit is an asset class worth looking at. Specialized managers operating in narrow segments of the market, where the manager has deep expertise in a specific type of borrower, can earn yield that public market bonds simply can't match, because they're underwriting loans other lenders cannot intelligently evaluate. Case for owning private credit holds up when it's accessed through disciplined managers in the segments where their expertise gives them a real edge. Number three, real assets. Investments in physical assets that produce cash flow from real-world use. A data center earns money because tenants need computing power. Farmland earns money because crops get planted and sold. Infrastructure earns money because people pay to use roads, ports, and other public systems. The returns come from a different source than the returns on stocks and bonds, which can reduce portfolio risk, dampen volatility, and smooth compounding over long time horizons. Many pension funds and university endowments have owned all three of these categories for decades. If your advisor has never talked to you about any of them, you could be missing important parts of a complete portfolio.